Hello everyone, it is Evan from the Trade Risk on Wednesday, October 28th, here with a market recap video. We are first going to analyze the current market environment. We're going to look at a few other markets, some leading sectors, individual names, and then a couple of trade ideas for the remainder of the week. Now today, the bulls got it done, closing up 1.14% in the SPY ETF that tracks the S&P 500, and this rally continues. So let's take a step back, look at where we've come from. We'll start right here from this breakout out of this range back here in early October, and since that point we've been riding the fast exponential 8-period moving average to the upside. This entire month of October has been a rally, has been non-stop upside, and we had a few couple of days of pause in between here. Most recently this week we came in right here on this candle, this digestion day that we put in this Monday, and then Tuesday we came in just a little bit more. We followed through to the downside. We filled this open gap, and we didn't even really touch any of this 8-period EMA, and then we were off to the races today. So that shows you how much strength there is and how much bid and urgency there still is in this market. Now, perhaps that has to do with some of the sentiment, which a lot of people seem to be disliking this rally or not involved in this rally. And that, I feel like, explains as to why we are just floating sort of effortlessly higher here. We're taking out resistance. We aren't even stopping for these previous levels that you would think be an issue for the market given all the overhead supply, like this 205 level, but we're just cutting right through it and we're chomping to the top end of this range. So the all-time highs up here in the SPY and the top of the range that we were in for most of 2015 is now back on the radar for sure, this 212 level. And again, I don't think we can just beeline there, but you never know. We've continued to do that so far, so perhaps you know, what stays in motion will continue in motion. But for now, I mean, I think this market has continued to be difficult to chase, but you've had to take a stance here to get on board, and I think that was the tricky part, and that's why there is still such an urgency to get in this market, is because you had to buy this up somewhere. This hasn't been an easy market to catch for the month of October, just given where we were in this volatile landscape, and then all of a sudden another V shape, which looks like we're heading towards the highs again. So right now, again, everything's everything's bullish right now. There's nothing to really worry about. You could say we're stretched. We are continuing to just march higher stretched. We are a little bit a ways from some of these fast moving averages, but they're certainly in bullish alignment, and dips continue to be bought, as demonstrated by today's action, and yesterday's minor 2-day pullback was all that we got. Now the big topic I want to discuss today is the small cap, the Russell. And I put a post out earlier this afternoon, and I talked about how important this index was for us to look at, especially to gauge sort of the next directional move for the market. And clearly, given the close of this market, it certainly seems to be on the bullish resolve. Now, of course, this could be some type of fake out. We could reject tomorrow and come back in, and that's fine, and we adjust accordingly. But I think what's interesting to note about the Russell is it's been a non-performer for so long. It's been in a downtrend since topping out in July, and more recently it's been range bound in here, and it hadn't taken out the September highs like the S&P or the Qs did. Today, though, we noticed that this has been consolidating underneath resistance, and it is making an attempt to take out September highs and start to potentially reverse this series of lower lows and lower highs. So this is very constructive action, and given where the SPY has been and what this market's been able to do without the participation from the Russell, I think that again leads us to think that these all-time highs up here in the SPY are going to be in sight in the next couple of weeks. So the IWM, this is a market that I got involved in long today. I'm playing for this breakout above this prior resistance, and I'm looking for continuation higher. I mean, I think a next logical target's right around 120 or so. This was an interesting level back earlier in the year as well, as it held as support multiple times. So I think that is a level of which this market could get to, not again in a straight line, and certainly it doesn't have to. We can easily reject tomorrow and come back down here and chop it out. But I am playing the breakout in this, looking for these stocks to start to lead us maybe on a new rotational leg higher. The Qs continue to work as well. This is we've seen a lot of bullish earnings announcements in this sector in the Nasdaq, and these names continue to perform. So we are nearly at these highs here. You can see how much these are leading relative to the IWM and the SPY here. We're already, actually this is a new closing high now. This is a new closing high for the year of 2015, 114.02, and it looks like back here. Yep, so we did make new yearly closing highs in the Qs today. Very constructive. Again, perhaps a little stretched, but certainly where there's been a lot of rotation. So I think that's how I'm summing up the markets right now. You got to be constructive on it. There's no reason not to be, and those clues have sort of been lining up and stacking up in the bulls' favor now for a couple of weeks. So let's look at some other markets. We'll start with USO. Had a really nice snapback session today, 6.3%. And I think this is interesting because this was the range we were watching for some time now. We saw this start to break down here, and we thought about, well, maybe these lows back down here around $12 would have to get retested, but it looks like, especially with this action, this looks like early signs that this may be some type of pivot high or low here. Again, it's way too early to say that, but just given the sharp move here back into this range, you know, it's interesting to take a shot on the long side here using this level as a low. I think that could work out for you. I have no position in this market, but that's something to keep in mind. UNG continues to just get beat up here. It's been in a downtrend. There's nothing new here. We've been talking about this for a while. Ever since breaking this support, it's basically been all bears, and again, I see no reason why that won't continue. We are a bit oversold to the downside, but you know, once that sort of works itself off, again, it still has a ton to prove. So there's still a lot of pressure to the downside there. Go to the TLT. This is holding up today, down just 0.4%, but it's still holding above this 123 area that we've been talking about for some time. It's very, you know, lethargic in here. Nothing really going on. We got to just wait to see, you know, some type of sharp directional move to take place here. Again, it's, you know, grinding out slightly higher highs here, but still looks just very, you know, no real direction whatsoever. So it's just not really showing us too much signs of life. Not an interesting market right now, and it's just caught in a lot larger term range. So I wouldn't really be too interested in the TLT. Next, we'll look at gold, which had a bearish session today, had a lot of volatility given this FOMC announcement today. It's retesting this level right here, this zone around 110. I think we were very constructive. We were happy to see this market get back above this prior breakdown level. We want to see it hold in around here. You don't want to see this just start to roll back over. That wouldn't be a good sign for gold, so keep that one on watch. Silver, a little more positive, closed up on the day. It's holding above this support right here, right around $15. That nice round number. I think as long as it stays above there, I think this one looks constructive. Fast-moving averages are bullishly aligned, so continue to look for some long setups in that one there. Now, if we look at some leading sectors, there's a ton, but notably the one I want to point out is XLF today, which had a 2.5% up day, real monster day, cleared back above this $24 level, which was support in here for so long in 2015. So some very constructive action. Again, this XLF, the financials have been sort of dull and laggards for most of this year, and just most recently too. So it is constructive to see them start to get some bid underneath them, and I think that would be very constructive for the market. Otherwise, everything else seems to be working. It's very broad participation. Even XLV, healthcare, and IBB are catching a bid now again, and these were the real beaten up ones. And you know, technology continues to lead. There's a lot working right now. So let's get into some individual names. Apple had a really nice session today. Had earnings out yesterday, and you know, really positive reaction. All things considered, up 4%. Is constructive. It's clearing up above this resistance level. It's got this overhead supply to contend with as it gets back up into the 120s, but so far so good. Apple looks good for more. Google continues to look good as well. Had its earnings out. It's still hanging up high. Again, overbought. It's stretched. Might need a little more digestion, but for now it's continuing to work well. Netflix has continued to just bounce around in this range, not too interesting. It is finding support right below $100 at this $95 level, so I think you can still trade against that, but it seems to be consolidating in a range, and very necessary that it does so, because it has had a really strong run over the past few months, several years really. So Netflix looks to still be cooling off there. Amazon continues to charge higher. It had a pretty blowout earnings reaction as well, extended above all the fast moving averages, but still trending higher, still looking real hot. So Amazon looks constructive there. Facebook, similar comments, hasn't reported earnings yet. I'm not sure when that date is, probably later this week, but we're above $100. We're trending higher. We're extended up, but again, the chase seems to be on here in Facebook, so looks real constructive. Look for some pullback, look for some consolidation to maybe get involved if you're not already. Twitter had its earnings yesterday, came into the day down some 12% and rallied all day, closed the gap, and finished down just 1%. So again, I think now you have even more, you get a larger line in the sand right here, right around $27 or $28 rather. I think you know, you can easily shoot against this level here. If you're below $28, I think that could be an easy point for you to just dump the stock and move on. And I think that's you know, something worth considering to you know, going forward. And then if you're not involved in this yet, you may want to give this time to still digest for the remainder of the week. And I think above these cluster of highs here, $31.50 or so, $32, starts to get more interesting for a new entry in Twitter if you're not already involved, or if you want to add to the position. Next, we'll look at Alibaba. This one had a nice session as well, up 3.6%. Reported earnings, they were favorable. Again, it's changed the direction of this trend that it's been in for a few months, which was on the downside, and it's now trending higher. It is a bit extended here, so I don't necessarily recommend chasing, and it is above this prior band of support. There was a lot of supply in here right around $80, where it seemed to be closing above that. Look to see how this finishes out the week. Looks constructive though going forward. GoPro, I know this is reporting earnings after the bell, and I think it's getting beat up. It had a nice 7% session, and it looks like it's all the way down to $25 in the after session right now when I'm recording this, which is a little after 4:30. So it's looks like it's making new all-time lows here in the after hours. Very not good at all. And again, it's been in such a strong downtrend, and it looks like that's continuing right now in the after hours. Now, if we look at some other markets, or if we look at some trade ideas now for the rest of the week, we'll start with APLE. This one, new all-time highs today, looks constructive. It's a REIT, so maybe a little boring for some of you guys, but it is, you know, closed up 2% today, new closing high. It had a nice base taking out this pivot high, and it's had a, you know, above this $19.25 level, looked pretty constructive, and it got that done today. So that one looks pretty interesting going forward. Another one, BKU. This one started to break out today. This is the Bank United. If you look at a weekly chart, you can see here it's been hovering around, failing to clear above this $37 level for a few weeks now, a few months really, and it is trying to get that close now. So it's been in an uptrend. Looks like it wants to start continuing there. Keep that one on watch. ULTA. Here's another one. I like this one here. Again, on the weekly chart, I think shows a better picture. 170, this area has been resistance in it for a few months now as well, and you had a nice strong day in it today, up 2.3%. Looks like it wants to start legging higher yet again. And those are the only three I have on watch right now. I'm going to do some more scanning later on, but I hope this video helped, and as always, thanks for watching. I will catch you next time.